Hello, my name is Bryant and I want to thank you so much for your time. And guys, I just really want to come to you today and just share with you something that has been on my heart. I've actually been studying the subject matter now for close to 2 years, and I can say that I'm absolutely thankful that this information and this subject matter has actually made it to me. I was oblivious to it or didn't know too much about it, but the more time that I've spent with it, the more that it's made sense to me, more that it's made an impact for the way that I look at my life and others around me. And so it's good news, okay? Just like the message of Christ, the message of Jesus, that information has the power to change generations. And so this information that I want to share with you, it can actually help you, help the ones that you love, and future generations. So with that being said, I appreciate you having an open ear and an open mind. Allow me to communicate this the best way that I know how, and I just want to add value to your life. What I'm going to share with you is from the company that I'm with, part of, because I'm an independent insurance broker, and I want to talk to you about the new rules of money. As I was saying, this made an impact on me. So the value you get from me, just let it be for education, let it be for your understanding, and then what you do with the information, it's going to be totally and entirely up to you. That being said, let's go. So right now, if we would just take a look at the report card about retirement, this is what we'll see. And maybe this affects you more than it affects others, or maybe retirement's a long way from you. But I'll tell you this much, folks. When I was younger, 20 years old, felt like I was invincible. Here I am, 20 years flies by just like that. And retirement is something that I am thinking about, concerned about. So here it is. 1 in 3 retirees right now, they are living in poverty. 7 out of 10 retirees are not prepared. Only 13% of them can say that they're actually knowledgeable about financial and investment products. 85% of them, they've got a chronic illness that they're battling. By the way, I saw them drinking a cup of coffee there. I wanted a sip. And you can go ahead, get you something to drink. Man, we're having a conversation. 60% of people don't believe that their retirement is going to even last them, or their savings, it's going to even last them to the age of 90. This was a kicker for me, guys. They're predicting Social Security can be depleted in 10 to 15 years, actually by 2032. And this is coming from our Congressional Budget Office. So, if that's the plan, that millions and millions of Americans are actually depending on it, well, I can't wait until I get my Social Security check. If that's the plan, and that stream of income is actually supposed to be dried up, does that sound like a good plan for you? Does it sound like a good plan for me? So I want you to learn how we can cover all of life's what ifs with just one payment. This is going to be a way for you as the breadwinner, the one that has the family, the one that has the wife, the children, right? People that love you and depend on you, depend on what you can provide. And I know it's not just single income home. We're talking to families that have a dual income home, right? So it's more than one income. But what if, right? What if you live a long time? Do you have retirement savings? What happens if you get sick as the breadwinner? Do you have living benefits? And what happens if you die too soon? Look, nobody wants to talk about it, but we can't be like an ostrich, ignoring what is going to be a known fact for all of us. We can't just stick our head in the sand and ignore it. But what if you died too soon? Do you have life insurance that will cover your family and financially protect them? So, if you live a long time, if you get sick, or if you die too soon, I want you to know that there is solutions. So, for example, if you do live a long time, did you know this right now? Majority of our country's savings for retirement, it's locked into either an IRA or a 401k. And a large percent of this money can be lost to a stock market downturn, right? They're exposed to the market risk. They're exposed to taxes and also the fees. And those three vulnerabilities can deplete your retirement savings. Market downturns can destroy your retirement. And we want you to learn how you can actually eliminate these vulnerabilities, eliminate the risk, the market risk, increase your tax efficiency, and reduce the fees. You can do that, my friend. The choice, actually, it is yours. We can't blame it on ignorance anymore. There's so much available to us. We're living in the information age, right? So you can have a tax advantage or a fully taxable retirement income. Which one sounds better? Tax advantaged, tax-free, or fully taxable? You tell me. You've been paying taxes all your life. What if there's a way to avoid taxes, right? Avoid sharing with Uncle Sam, wouldn't you want to know? And how about this? What happens if your body deteriorates? What happens if you're not healthy and you become sick? Every year, millions of Americans are diagnosed with a heart attack, stroke, or cancer. The average age of a critical illness claim is 43 years old. Now, with all the advancements in technology, what's great is that these people actually live through, 70% actually will live through, they'll survive that incident. But more than half of those people will go bankrupt. And the average age of that happening is 44 years old. Can you imagine? So if you get sick and you can't go back to work, my question is this: who's going to pay for your bills? Hey, if you've got the greatest health insurance, I get it. But did you know your health insurance, it only pays for the medical bills? What about the mortgage? What about the meals? What about the car payment? What about the things that it costs just to live, just for your family to survive? We need to think about those things. And then, like I said earlier, nobody wants to talk about it. We're not trying to be morbid here with our thinking, but it is a reality. If you died too soon, what's it going to be like when you're gone? Can your family survive without your income? You know, would you want your mortgage to be paid off? Would you want all of your debt to be paid off? How about your family? What about them? What about your wife? What about your children? Are they going to need your income? And how long can they sustain without that income? Or how long would you like them to be taken care of while they're going through the grieving process, right? Nobody wants suddenlies in their life, especially of this kind of caliber, this kind of a storm, right? So there is life insurance with benefits that you can get for your family, and that income, it's going to be tax-free. So I want you to know that there's 3 kinds of life insurance. You could get term, you could get guaranteed universal life, and you could get an index universal life. So some brief points about that. Term, it's kind of like you're renting out your coverage. In the term policy, there's no cash value. You've got the lowest cost of an expense in that insurance. The less amount of years, the lower it costs, right? The longer amount of the term, it can become expensive, okay? But the great thing about this is that you can actually convert your term coverage to a permanent one at a later time. Next is a guaranteed universal life. It's like you are owning the policy, actually, right? You're not like renting it, you own it. So it's going to be guaranteed coverage to any age and guaranteed level premium to any age with a return of premium option, okay? The last one I want to talk about is the index universal life, which actually has those retirement cash values. With this plan, you can get it up to age 121. Great thing about this is that it is linked to some indexed accounts and there is no downside risk. This one has a tax advantage income. You're going to love this strategy, okay? So what does having life insurance with living benefits provide for you? More than anything, it's the peace of mind. You won't have to worry if there's going to be an income if the storm comes to your life, right? And the word says, the rain shall fall on the just and the unjust. So when those storms of life come, are you covered? Is your family covered? Are you protected? So here are the riders. You have a critical illness rider, and that covers basically, like I said earlier, like if you had a heart attack, if you had a stroke, if you got cancer. Another rider is the chronic illness rider. This is similar to like long-term care, right? So it's going to be used for those medical expenses that could pop up. 90% of people don't even have long-term care. And you have terminal illness rider. So if the doctor gives you a report saying that you've got a few months to live, you can access your living benefits. So what's amazing is that you, as the one that's insured, the policy owner even, right? You become your own main beneficiary, and this is living benefits. So while you're still alive, you have this kind of coverage and protection. So use the living benefits once they're activated. Use it to pay for the medical care that you need. Pay off your home. Pay for your children's college. Do you and complete your bucket list. Whatever you want to spend the money on, it's yours. It's not going to be limited to you have to spend it on this or you have to spend it on that. And that's amazing. So I want to share with you one of our testimonies, and this is Dr. John. Dr. John, he bought one of our IUL policies primarily for the supplemental tax advantage income. The living and the death benefits are important to him, but it was secondary. He paid only 1 month into his policy, and Dr. John got the bad news that he was diagnosed with throat cancer. Let me tell you, friend, nobody wants to endure that, okay? I've seen co-workers leave, go get their treatment. They're gone for weeks. They have to come back to work. They're wearing a beanie, weak in their body, but having to still provide for their family. In Dr. John's case, he didn't have to do that. He was paid over $734,000, and that is absolutely amazing. What do you think Dr. John could have done with that money? What would you have done with that money? I know what I would do. The mortgage is paid for, okay? The best doctor that I could get for myself, all the needs are taken care of for my wife and my children. That's peace of mind. Wouldn't you want to be able to just stay at home, focus on healing, spending time with your family? Of course you would. Now look at this. This is a quote from the AARP. It says, "Cancer can attack more than just your body. It can also destroy your bank account. Even the best health insurance might not protect you." And that's absolute truth. Man, cancer, it don't discriminate. It doesn't matter if you're middle age, if you're older, even babies can get cancer. So everyone needs these living benefits that I'm talking about here. So now what I want to show to you is 2 strategies that you can actually help create wealth for yourself and preserve that wealth. And it's an index universal life and a fixed indexed annuity. Now, inside the retirement planning, there's going to be 4 phases that you're going to go through. Number 1, the contribution. Number 2, accumulation. Number 3, distribution. And then number 4, transfer. So you're seeing here on the screen 2. A very common way that people are saving for their retirement right now is through a 401k. But I also want to introduce to you the IUL, the Index Universal Life. So here, in the contribution phase, the money that's going into the 401k, it's tax deducted, right? So it's before you even get your paycheck, you're putting money into that 401k. Not paying any taxes on that. The IUL, it's money that you've already been paid taxes on, so you're buying your policy or you're contributing into your IUL. Phase 2 is the accumulation phase. This is where you're going to be getting gains on your investment. So in the 401k, all of that growth, it's tax deferred. In our IUL, same thing. It is tax deferred. Now, the distribution stage, this is when you start taking your income, your payment from your savings, right? So this is the time Uncle Sam will start to tax you every time that you start to get your distribution. However, in the IUL, you don't have to be taxed. There's ways that are legal that you can actually have a tax advantage retirement income inside the IUL. Now, when you pass away and you're leaving it behind to your beneficiary, well, guess what? Inside the 401k, it's going to be taxable. But inside the IUL, since it's a life insurance policy, it's going to be tax-free death benefit for your family. So let's take a look at it. 401k versus the IUL. My question to you is this: is it smarter to pay taxes on the seed or the harvest of your retirement savings? Should you pay taxes on the seed? It's not matured. Or should you pay taxes on the harvest when all of that wealth accumulated and grew? You tell me. So look at this quote here from the author David McKnight. He said in his book, The Power of Zero, according to the Congressional Budget Office, if Social Security, Medicare, and Medicaid go unchanged, the rate of the lowest tax bracket would increase from 10% to 25%. 25% would rise to 63%, and the 34.9% bracket would go to 88%. And friends, it's on the horizon. Our taxes will not remain this low, okay? History repeats itself. Look at the tax rates from 1960 to 1963. The lowest tax bracket was 20%, the middle tax bracket was 69%, and the top tax bracket was 91%. My question to you is, when you are retiring, how do you want to have your income? How much of your income do you want to have? And do you want that income taxed? If there was a strategy that you could lower and reduce your taxes, wouldn't you want to do it? So look at this quote here from one of the wealthiest men in the world. This is Warren Buffett. And he had 2 rules about building wealth. Rule number 1, never lose money. Rule number 2, don't forget rule number 1. So indexing, this is how we can utilize the rules of one of the wealthiest men in the world, okay? This is how you can win and not lose, where you can participate in the upside without the downside market risk. So let me show you. This red line that you're taking a look at right now, this is the risk of your retirement staying inside the actual market. So guess what? 401k, 403b, 457, Roth IRA, TSP, mutual funds. Guess what? They're inside the market. They're in this red line. This blue line is someone that's putting their money in the index. So it's not tied to the market. Well, what does it mean when it's in the index? It's in a life insurance contract. It's not looking, or it's not right in there with the market. It's just observing it inside that index. But look at this. You have the protection that when the market falls, you don't drop, but you actually have a security by being at the floor, and our floor is 0%. When the market increases, you're not playing catch up like everybody else, right? They're the ones that lost in the market downturn, they're recovering, they're playing catch up. So you didn't lose in a market downturn, and you are not rebounding, you are not recovering, you're increasing, you're growing. So wouldn't you want to win and never lose? I do. The only thing that I'm comfortable about losing, my friend, it's just my weight. That's the only thing that I'm comfortable about losing. And who wants to lose money, right? Look at this. Our clients have lost 0 in a market downturn. Can you say the same for yourself if you're in the market? So I want you to take a look at this. How could an IUL actually play out for you? So here's a young man, 30 years old. He decides to put $300 a month into his IUL. Instead of putting it into the 401k, he's going to use the IUL, known as the smartphone of finance. So that's going to be $3,600 a year. And he says, you know what? I'm 30. I'm going to do this for 40 years. I'm going to be working, and I'm going to be saving for my retirement. Because when I retire, I want to be golden corral. So he puts in $140,400. At the age of 70, I want to show you the living benefits, what this could mean for you. Tax-free. He starts getting an income stream of $52,580, and that income stream is going to be yearly until the age of 90. So he's already taking out $1 million. Only put in $140,000. And over time, that thing grew with compound interest. So if he got sick at the age of 30, in his policy, he's got living benefits of up to $388,000. If he passed away at age 30, he would have a death benefit to leave for his family of $430,601. And look, if he uses all of his retirement income stream, dies at the age of 90, he still has a death benefit of $101,474. If you did this in a 401k, could you get the same thing? In the IUL, it's possible. So, I want to teach you another way that you can have retirement safety. Reduce your risk, reduce the fees, and have competitive returns. So let's take a look at it, because I'm comparing the traditional money, right? Let's say you've got your 401k and you've got $500,000 in there. You're happy about your nest egg, but let's take a look at the things that you have to face with your retirement. You're going to have various fees. Your money is at risk, and there is no guaranteed income option for you. However, if you rolled over that $500,000 from your 401k into a fixed indexed annuity, what could you get? You could get no to low fees. You could get the assurance of no market risk, and you can have a guaranteed income for life. So it is your choice. It is your money. And the thing that I want you to have is education, right? Education, information, understanding, education, you're learning. So here's 3 good books you could pick up and do your due diligence, right? First one is The New Rules of Retirement Savings. That's by Martin H. Ruby. The next one is The Retirement Miracle by Patrick Kelly. And then The Power of Zero by David McKnight. So your next step, like I said, this is just like sharing the gospel. You don't want to keep it to yourself, especially if you know it. Knowledge is power, and helping people make the right choices, the best decisions for themselves and for their family. It's win-win. So what I'd like to do is just help you find out, right? By doing a needs analysis, you need to know how much coverage you actually need for you, for your spouse, for your children, okay? And then with that, we're going to make sure that we create an affordable strategy to help you fund your retirement so that you can retire. So that if these what ifs of life pop up, okay, and they can happen, you cannot tell me that with 100% you're never ever going to get sick. You cannot tell me, and you couldn't tell to your family or to your work, that you'd be able to have enough strength and health to continue to clock in and do your work for the rest of your life. You can't tell me that you could do that, okay? And nobody will dodge the Grim Reaper. There's 2 things that's guaranteed in life, somebody once said, right? What is it? It's death and it's taxes. Payday someday. Really want to just help guide you through your next steps. So this is what we're going to do. We want to prepare your personalized needs analysis. As you can see that form there, what we're going to do, we're going to collect that information from you, because not everybody's plan, not everybody's needs is cookie cutter. It's going to be different for every household. So by knowing this, we're going to create an affordable strategy for you so that you can find the money to fund your supplemental life savings. And so I want to thank you so much for your time, for your attention. Please take a moment to read the disclosure, the different companies that we're working with. They have products, they have services. We are not tied directly to a bank, a federal agency, nor the FDIC. So there's some disclosures there for you. I want to thank you again for your time and for your attention. Here's my contact information. Don't hesitate to give me a text, give me a call, or send me an email. Again, I'm Bryant Mora, independent life insurance broker with FEG. And I want to thank you so much for your time. God bless you, and have a good rest of your day.